Welcome to Trustnodes News. Today's latest follows.
Bitfinex and Tether are financially strong, full stop, so says Finex. Bitfinex, which may now be nicknamed the Iron Exchange, has denied allegations by New York Attorney General Letitia James, who in a press release stated, "Our investigation has determined that the operators of the Bitfinex trading platform, who also control the Tether virtual currency, have engaged in a cover-up to hide the apparent loss of $850 million of commingled client and corporate funds." News Corp's Wall Street Journal then probably relied on this press release, with their crypto reporter Paul Vigna stating in a headline, "Bitfinex used Tether reserves to mask missing $850 million, probe fines." Bitfinex says, "We have been informed that these crypto capital amounts are not lost but have been, in fact, seized and safeguarded. We are and have been actively working to exercise our rights and remedies and get those funds released." Sadly, the New York Attorney General's office seems to be intent on undermining those efforts to the detriment of our customers. That the funds were seized is corroborated by the filed court document, which states, according to documents provided to OG by respondents, and based on statements made by counsel for respondents to OG attorneys, an individual at Crypto Capital told the senior Bitfinex executive the reason that funds totaling $851 million could not be returned to Bitfinex was because the funds were seized by governmental authorities in Portugal, Poland, and the United States. Based on statements made by counsel for respondents to OG attorneys, respondents do not believe Crypto Capital's representations that the funds have been seized. As you all know, Bitfinex has been struggling with the banking system since about 2016, when CFTC fined them for offering unregulated margins. The almost complete merger between the banking system and law enforcement was then shown shortly after, when Wells Fargo, the corresponding bank, refused to serve any bank that dealt with Bitfinex, presumably in order to enforce the above fine. Since then, Bitfinex has been playing a very complex game, and so far, although with some troubles, it has been playing it fairly well, and that the exchange does still stand. Part of this game was using intermediaries to hide the fact the funds are coming from Bitfinex, including payment processors like Crypto Capital. Then, on or around April 2017, it was revealed about €400 million were seized from a Polish bank, pictured above, used by Crypto Capital. At the time, Polish media was stating it had to do with Bitfinex mainly, although as Crypto Capital seems to be or to have been more of a general processor, there were seemingly other funds allegedly related to drug cartels. It is around this time when Tether begins to take off in a big way. To keep on running, Bitfinex basically tokenized the dollar so as to bypass the banking system entirely, and presumably so as to prevent the seizure of their customers' funds. As a new invention, Tether faced many questions and an incredible amount of scrutiny, but at the end it was revealed by an unnamed government official himself that Tether is fully backed after all. This latest announcement further shows that apparently the only thing they could find on Bitfinex was that it used some of the Tether funds to process customer withdrawals, presumably while they waited for the release of this $850 million. Tether has now become a global phenomenon that serves individuals from South Africa to Brazil, Russia to China, and everywhere else in between. It's a crypto dollar running on an open public blockchain, with everyone able to see all of its movements. In China in particular, this crypto dollar is allowing them to bypass the banning of centralized crypto exchanges by getting USDT over the counter, OTC, to then trade it on crypto-only or even decentralized exchanges, as an ERC-20 version of Tether has been launched. This bypassing of the banking system through a crypto stable money is radical, yet as shady or otherwise as it may be, Bitfinex stood in the face of considerable assault. There are now more legit versions of Tether, whether USDC, DAI, or any of the other ones that seem to come out every day. So what happens to Bitfinex now is not that important, but the Iron Exchange will probably always have a place in the history of the rise of cryptos, for in fire it seems to have been forged. Copyrights Trustnodes.com. Futures expire, cryptos fall. It's the last Friday of the month. That means futures expire today, and like clockwork cryptos fell about 10% before recovering to only minus circa 4%. About 65,000 Bitcoin representative contracts exchanged hands on CME this April 24. That's circa $340 million of Wall Street bankers' money. Every single day, except for weekends, they take a bet on whether Bitcoin's price in crypto exchanges will rise or fall, with such bets in total now usually amounting to about $300 million a day. These bets never touch actual Bitcoin, but they are based on Bitcoin's price as aggregated by CME on at least 4 exchanges: Bitstamp, Coinbase, Itbit and Kraken. Each day, the BRR aggregates the trade flow of major Bitcoin spot exchanges during a specific 1-hour calculation window. This 1-hour window is then partitioned into 12 5-minute intervals, where the BRR is calculated as the equally weighted average of the volume-weighted medians of all 12 partitions, they say. Such partitioning is done to prevent spot price manipulation, but the use of this specific 1-hour period is interesting because all you need to do to circumvent it is to manipulate the price the day before. That being between 5 p.m. London time, say on April 25, and before 3 p.m. London time on April 26. Bitcoin's price on 3-hour candles, April 26, 2019. 9 p.m. London time sounds perfect. Europe is maybe having dinner, some family time, watching the news, or maybe for some they have gone to bed. When they wake up, hopefully they'll give some more downwards momentum, preferably before 3 p.m. The contract can then expire and the Wall Street bears can make some money. Not that the New York Attorney General would conspire in such matters, of course. New York City was literally governed by bankers once, and some say it still is, but we're sure this announcement at such a perfect timing is a complete coincidence. What is most certainly a complete coincidence is the news release at specifically 4 p.m. New York time. Usually market-moving matters are kept for only after trading hours, but crypto is 24/7. So there couldn't have been any intention to give Wall Street another hour until 5 p.m. when most then close their desks. The Attorney General of course wouldn't have much knowledge of futures and the rest because they haven't been investigating crypto exchanges to give them an intricate view of the entire space as they said they have. Nor is it necessarily their job to be mindful of market-moving announcements or to word their press releases very carefully so that they don't hide pertinent information. Nor would now questions be raised as to why this $850 million was seized and why is it not released if it belongs to ordinary legit individuals. Finally, there would also be no questions of CFTC and their apparent delay of crypto-settled futures while they were keen to get out fiat-settled ones. A probable cartel that attends the same parties with regulators and all the rest intentionally or otherwise rigging the system is of course not why most like cryptos. They're in it for the tech. Copyrights Trustnodes.com. They rig the price of gold, silver, foreign exchange, interest rates, but can they rig Bitcoin? After years of complaints by traders, some of them finally decided to file a lawsuit in 2014 alleging banks were rigging the price of gold over about a decade from 2004 to 2013. Deutsche Bank AG has agreed to pay $60 million to settle private U.S. antitrust litigation by traders and other investors who accused the German bank of conspiring to manipulate gold prices at their expense, Reuters reported in 2016. Investors accused Deutsche Bank, HSBC and Scotiabank of abusing their power as three of the world's largest silver bullion banks to dictate the price of silver through a secret, once-a-day meeting known as the Silver Fix, Reuters said in another report. Deutsche Bank agreed to settle that too and turned on the other banks, but the bombshell of interest rate rigging, that is the value of money itself, moved on attention. Then shortly after, it emerged that the Bank of England's senior foreign exchange trader had been sacked amid an investigation into what the central bank knew about foreign exchange manipulation. Mark Carney, the bank's governor, said that Martin Mallet had not been dismissed due to Lord Grabiner's report, which singled him out for criticism, but that the sacking related to other conduct breaches that emerged in the investigation. The 6 banks, minus Bank of America, were fined a total of £1.1 billion by the FCA and $1.5 billion, £933 million, by the U.S. Commodities and Futures Trading Commission, CFTC, yesterday morning. At the same time, the Swiss Financial Markets Supervisory Authority announced a 134 meters Swiss franc, £88 million, fine on UBS, and yesterday afternoon, the U.S. Office of the Comptroller of the Currency announced an additional $950 million in fines on Citibank, JP Morgan and Bank of America. In total, the fines reached £2.74 billion. The banks themselves were not fined for currency manipulation, but rather for failing to manage staff. These are what has been proven, but the value of almost anything traded on Wall Street is set by banks through what they call price fixing. Walking into the venue for the meeting that fixes the world gold price at NM Rothschild feels like stepping into another age, before the screens and computer systems used by most markets were invented. On 2 of the 5 tables sit old-fashioned hand-dial telephones, although these are for show rather than use. Rothschild's representative, the chairman, sits at the central table surrounded by the 4 other shareholders in the market. Once independent brokers, they now represent Deutsche Bank, the Bank of Nova Scotia, HSBC and Société Générale. The chairman declares the opening price. The fix is set when each shareholder has lowered his union flag, signifying that a balance is achieved between buyers and sellers. The meetings usually take around 15 minutes, although during the 1987 stock market crash the first meeting lasted more than 2 hours. Bankers basically meet each other twice a day in person or by phone and say something like I have X amount of gold to sell or dollars, pounds, silver, crops, etc. for X price. Another banker then agrees to that price or doesn't, and whatever price was agreed here becomes the price of gold for jewelry sellers, gold to cash converters and pretty much everyone else. Opportunities for manipulation are obvious and have been neutralized as shown by the above cases, but now they claim the system has been reformed because they no longer use phones, instead they do all of the above online. It is still the same bankers, it is still the same process of setting X for X price, with that price then becoming the price, but instead of calling each other they now type on some website. The Securities and Exchanges Commission, SEC, demanded the same process before granting a Bitcoin exchange-traded fund, ETF. So the Winklevoss twins set up the Gemini auction, which says, market participants can place an auction-only market order, which will execute at the final auction price, or a limit order indicating the maximum buy price they are willing to pay, or minimum sell price they are willing to receive. The Gemini auction will match the aggregate buy and sell demands from all participating orders and determine the price, cross price, at which the largest quantity can be filled. SEC denied their ETF application anyway, perhaps because it isn't only banks that can take part in this auction and perhaps because no one pays any attention to this auction. Instead of bankers trading in a secret room or a secret website, Bitcoin is traded 24/7, across the world, in hundreds of exchanges, with millions of people undertaking billions of auction which give the price at any second. This very different setup from traditional securities which usually can only be traded on one exchange, might make crypto price rigging at the fundamental level far more difficult than for gold or other commodities. That's because bankers do not control Bitcoin and thus do not control its price, nor are bankers the main crypto traders. Nor does everyone effectively have to go through bankers to trade cryptos. Instead, Bitcoin and other cryptocurrencies have created a new financial system that looks like the old one in many respects, but is fundamentally different. Not having to go through a bank might not sound like much, but considering just 4 banks account for $200 trillion of derivatives trading, it means not having a highly centralized cartel that can set the price. There is of course probably still some manipulation in cryptos, but not of a fundamental level where 3 or 4 people effectively decide the price. Any such manipulation in crypto therefore would probably be temporary or a one-off, rather than a sustained conspiracy to lower gold's price over a decade. This challenges the role of bankers over the attribution of value, a prerogative they have held for millennials in part due to necessity because the old financial system requires intermediaries. The new one has code alone as the intermediary. Therefore it disrupts banking as we know it, and it takes away or reduces their power over our money. In the process, it returns at least a bit more sovereignty to the people, for it fundamentally challenges the centralizing effect, due to intermediaries, of the current financial system. That's of course in theory. In practice no system is perfect, but code money controlled by the people under rules that require no intermediary might be a bit better than 4 banks ruling the world. Editorial copyrights Trustnodes.com. CheapAir to accept Ethereum, Bitcoin Cash, and Litecoin. CheapAir, one of the biggest travel agency that began accepting Bitcoin all the way back in 2013, is now to start accepting Ethereum, Bitcoin Cash and Litecoin. Jeff Clay, CEO of CheapAir, revealed they have processed more than $5 million worth of Bitcoin payments. Now they're expanding to other cryptos. CheapAir is about to start taking Ethereum, which is new in addition to Bitcoin Cash, and Litecoin, Clay said. CheapAir tweeted, continues to embrace cryptocurrency as payment, and we're dedicated to cater to #Bitcoin, #Litecoin, #Dash and #BCH customers. Via Forbes Crypto Luke Fitzpatrick. CheapAir was apparently facing some difficulties during the bull run in 2017 when Bitcoin's fees skyrocketed. So they switched from Coinbase to CheapAir, an open-source Bitcoin processor. Now they're looking to hedge further and offer their customers the opportunity to choose from one of the top cryptos, so potentially lowering their reliance on network-specific factors while increasing competition between cryptos in the payments space. Copyrights Trustnodes.com. News of news for bears and bulls. The dip from the Golden Cross came as expected, with price holding surprisingly well, some would say. New York Sage rehashing some old news is blamed. Others blame India rehashing more old news. We blame Bongadov. Are we right? Time will tell. Off then to the clearing desk, and in no particular order because too many tabs open. Hyundai Motor Group announced development of smartphone electric vehicle pairing-based performance adjustment technology, which allows users to customize primary functions through a smartphone application, an industry-first innovation. The application provides optimized settings for a designated destination by analyzing the remaining distance and electric energy requirement. It can also accommodate sportier driving by recommending tailored performance settings. Hyundai Motor Group will utilize blockchain technology to prevent security issues while users upload and share their custom settings on the server. In the process of uploading and sharing custom settings, the system encrypts major performance parameters in a blockchain network by creating new data blocks and stores them in the distributed data storage system to block unauthorized manipulation. So they say. What blockchain this is they don't say, but slowly the tech is being integrated anywhere it can be utilized as a tool. The fledgling Chicago cryptocurrency industry has taken a turn for the worse this month, with one company that has operations in the city cutting back significantly and another one filing for bankruptcy protection. Coinbase, a San Francisco-based cryptocurrency services company that caters to retail investors, had opened an office in Chicago to build a new system for larger institutional investors, but the company said today it's dropping that initiative. Coinbase has consolidated our matching engine efforts into our San Francisco office, Rachel Horvitz, a spokeswoman for the company, said by email. This means we are shutting down the matching engine efforts in the Chicago office. She said about 30 employees were affected. Another cryptocurrency company not based in Chicago, though it has operations in the city, Bcause LLC and subsidiary Bcause Mining, filed for Chapter 11 bankruptcy protection earlier this month in U.S. bankruptcy court for the Northern District of Illinois. While the company is based in Virginia Beach, Virginia, it apparently filed for protection from creditors in the Chicago federal court because a utility company was garnishing one of Cause's bank accounts located in Chicago. So says a local paper. Mining has apparently become profitable now at 5 cents per kilowatt per hour, but such return of profitability might partly be because some miners are going under. Here's something from the Atlanta Fed. If a cryptocurrency, such as Bitcoin, were ever to become an important part of the global financial system, would we see the creation of cryptocurrency banks? If fractional reserve banks are likely to arise in a cryptocurrency economy, that could have a variety of important implications for the operation of the financial system. The level and fluctuations of such deposits could have a material impact on the value of the cryptocurrency and the stability of the financial system. Unsurprisingly, they conclude there would probably be such fractional reserve crypto banking, but Fed would be in a weaker position to mitigate risks. We would say they wouldn't be needed for such mitigation because they would be replaced by smart contracts, but we'll see. Staying on the same topic to a large extent, and this is from a university graduate thesis so not quite robust, he says. My results suggest that digital assets with deeper integration of blockchain, like digital assets under the DApp category, are more vulnerable to shocks from the long-term forward guidance of FOMC, whereas assets with top-level blockchain infrastructure, like digital assets under the currency category, shows no significant effect from either of the monetary policy shocks. So DApp tokens care about Fed, but Bitcoin or ETH doesn't? Maybe, it could make sense if this goes peer review because tokens do tend to be more concentrated in VC hands, so they could be more affected by their wider fiat portfolio. While Bitcoin or ETH of course are the people's money. Sources from the Russian Ministry of Economic Development and Trade have apparently stated that financial experts will start testing blockchain and cryptocurrencies in Kaliningrad Oblast, Kaluga Oblast, Perm-Krai and Moscow. Russian excellence in this field is well underway, says Chris Devonshire-Ellis of Deason Shearer and Associates. Andrew Yang, the meme U.S. presidential candidate, is apparently now attracting crowds of 4,000 people. Can he take on Trump, Sanders, and God knows who else from the long list of hopefuls? Probably not. People paid 29 Bitcoin for some shrooms and 43 Bitcoins for marijuana all the way back in 2010-11. That's some first-class trip, boys. A $200,000 spliff must have smoked like God. A case before a federal judge in Manhattan over fees Chase Bank charged its customers to buy cryptocurrencies could help define whether digital currencies are cash, a question with implications for what laws and regulations the currencies are subject to. Chase customers filed the proposed nationwide class action last year after the bank stopped letting customers buy cryptocurrencies with credit cards and began treating them as cash advances. The lawsuit accuses the bank of violating the U.S. Truth in Lending Act by hitting them with surprise fees and higher interest rates for the cash advances without prior notice. So says Reuters. The judge will probably say Bitcoin is cash. It is a commodity, a security, a currency, and whatever else anyone claims that Bitcoin is. The Indian government has kicked off inter-ministerial consultations on a draft bill to ban cryptocurrencies and regulate official digital currencies. The Banning of Cryptocurrencies and Regulation of Official Digital Currencies Bill 2019 draft has been circulated to relevant government departments, government officials aware of details told ET. The government had formed a panel under Finance Secretary Subhash Chandra Garg to draft regulations for cryptocurrencies last year. A number of government departments including the Department of Economic Affairs, DEA, Central Board of Direct Taxes, CBDT, Central Board of Indirect Taxes and Customs, CBIC, and the Investor Education and Protection Fund Authority, IAPFA, have endorsed the idea of a complete ban on the sale, purchase and issuance of all types of cryptocurrency according to government officials who did not wish to be named. They claim to be free, a democracy. Russia is probably more free. At least they have roads in Moscow and a rule of law, or the pretense of it, unlike in New Delhi where cows still roam main streets and courts barely function. Genesis Capital says they originated an additional $500 million in Q4 alone, bringing our total originations to $1.1 billion in 2018 of crypto loans. Decentralized collateralized dApps in contrast have issued about $30 million this month. Over 3 months that would be about $100 million. Not bad for a very new space. MakerDAO, a non-custodial lending protocol that produces decentralized stablecoin DAI, has witnessed a faction breakout in recent months to push back against Rune Christensen, who in 2018 decided to take control of a $130 million development fund, sources say. This is VC-backed, the block unnamed sources, so just what exactly they maneuvering over and who has more of an holistically beneficial position, is not clear nor clarified by this rumor mill. The Port of Rotterdam has reported that the first blockchain applications in the Netherlands Maritime Hub are beginning to take shape, with BlockLab, a joint venture between the Port Authority and the Municipality of Rotterdam, leading the way. In a statement published today, the 25th of April, the Port of Rotterdam said that the BlockLab team, led by Alhosia Beige and Jan Joost Jullens, is concentrating on 2 domains, logistics and energy. On the energy front, Rotterdam is moving away from the traditional centrally controlled electrical grid, supported by a few dominant power suppliers with coal-powered plants, to a more decentralized model which also incorporates numerous wind turbines and solar panels. According to Jullens, the BlockLab energy lead, blockchain is the technology that can facilitate such a smart, decentralized grid and help achieve the promise of the energy transition. The focus on blockchain is an offensive strategy, geared towards increasing the share of sustainable energy. In the logistics sector, said the Port of Rotterdam, there is already a decentralized network in which the majority of positions are occupied by small and medium enterprises. An average 28 parties are involved in transporting sea containers, explained the Port Authority, and they have to exchange data a total of some 200 times to ensure that a container reaches its intended destination. Interesting. One's body feels resistance to the proposition that blockchain can have utility in the real world, wondering if it is true. Yet developments are coming out now almost every day showing its utilization. It's as it was predicted. There were the pilots and the tests. Now it's deployment. Next year perhaps the mainstream debut. The world is changing, by the second. Slowly, and then boom. Ever thus. Copyrights Trustnodes.com.
That's it for today. See you tomorrow.